Hey everyone, today I wanted to go over the second of a five-part series regarding lessons from history. These lessons are meant to be regarding investing and overall financial planning, as well as just everyday life, especially with what we're going through right now with COVID-19 and the overall world shutdown. So the second lesson is regarding reversion to the mean. Now, if you're familiar with the investment world, the idea of reversion to the mean is actually a pretty common concept. It's something that's discussed often. First off, what is it? So think of the mean as the average, and think of this mean as a magnet. So the idea is when the market gets extremely high above that mean or low below that mean, that the path of least resistance is back to again the norm. Okay, so again, think of the mean as a magnet that's going to attract the movement of the market when it gets extreme. And why does the market get extreme? Well, it gets extreme because the market is really based on the emotions of thousands and millions of people. So it gets extreme in a positive manner whenever people get very excited. And greed kind of takes over, and it gets very extreme to the negative side whenever fear takes over. So the economy works in the exact same way in the sense of we know that it's cyclical, right? Which means that it has peaks and valleys. And those peaks and valleys are what deviates from the norm or the mean, okay? And that's due again to the excesses of society. So let's go over some examples of how we can kind of easily recognize what it is that I'm talking about. Remember the technology bubble, right? At the end of the 1990s, technology was going to change the world. Investors started to get very excited, which led to technology companies that had really never made a dime go through the roof. Their stock price went through the roof, right? And then eventually, everyone recognized that this was a little crazy, and that led to the bust, right? How about another most recent one that is involving us keeping up with the Joneses, right? Um, this led to many individuals buying houses we really couldn't afford, let alone need. And that certainly was exacerbated by a very low interest rate and very loose lending standards at banks and mortgage companies. I mean, I remember the most extreme that I can remember was a particular lender, which I won't say the name, lending out 125% of the value of a home, which is crazy, right? But it happened. And then what did that lead to? The real estate bubble, right? So those are obvious things where we look at emotion getting too high or getting too low, but it's also a common story in other aspects of our life as well. Can you think of a time that you let your emotions get a little too negative or a little bit too positive? So the question I want to ask you today is look around you. Do you see people you care about getting too emotional, either good or bad, about the current pandemic? And how do you think that's going to change in the future? And beyond how do you think it's going to change in the future, how do you think your future is likely to be impacted by your extreme emotion, right? And does it make sense for you to revert back to the mean, which is a dorky way of saying calm down a little bit, right? So I hope this finds you well. Again, I think there are always lessons in life to learn, and I hope you have a great day.